Unless you've been living under a rock the last few days, you will know that on April 2nd, Donald Trump went into the White House Rose Garden and announced Liberation Day, which was a display of poor mathematics, poor understanding of economics, US arrogance, all in the service of starting a trade war with the whole world at once. So this was the event at which Donald Trump put tariffs on basically every country in the world except Russia and North Korea, strangely enough. Who knows why? What we want to discuss today is a little bit about, how this affects the economy in general, but really zoom in, Chris, on what does this mean for startups? If you're a founder, we've suddenly got a whole lot of economic uncertainty. The potential for a US recession is going through the roof as a result of this. So how do we navigate this incredible uncertainty and volatility?
That's a really great question, Yaniv. How do we navigate this radical uncertainty? The problem is that there's uncertainty about the uncertainty, right? Because we don't know if the tariffs are going to stick. We don't know if they're just a negotiating tactic. We don't know if they are a negotiating tactic, what they're negotiating to. We don't know if he just likes tariffs and he wants them long term so that he can incentivize manufacturing to be moved onshore. We don't know what this reconfiguration of the global economic system means, whether the tariffs stay or not. What does that actually mean? Because it's a grand experiment on a global scale. So it's a sort of an uncertainty on top of uncertainty. Even if tomorrow they're fully reversed, I think the damage in terms of reputation, trust, hedging, and so on by the rest of the global community will be irreparable for the US, or at least will take many years to unwind. What does it mean to founders? It's in an era of uncertainty, you need to deliver efficiency. That's the superpower of startups, of software, of AI, is to be able to help companies do things with more efficiency, less costs, and less dependency on people and countries. And so that you have to rotate into that messaging and rotate into that reality and rotate into a team that can help you execute that, because otherwise you can't afford to burn dollars, time, and bad decisions and just kind of in a middling success.
I think the thing is, you talked about all the uncertainties, and I agree that there's just a huge amount of uncertainty, but you ended with something that I think is as close to a certainty as one can get, which is that this is not good for the global economy, right? Like, there's a question about how not good, but like you say, even if the tariffs are reversed today, a lot of damage has been done, right? And, we're not talking about stock markets being down as such, although I'll come back to that. But we're just talking about, like you said, the loss of trust, the kind of already the reconfiguration of certain things, the slowdown, loss of consumer confidence. That doesn't just bounce back straight away. But let's talk about the stock market and what it means for founders, right? Because, we've touched on this before, Chris, but I think at one level you can say, well, we're an early stage privately, we're a privately held company. What do the public stock markets matter to us? And I think the magic words here are multiple compression, right? Now, what does that mean? In general, when you look at the stock market or at any individual stock, you can look at it with both views. You've got this concept of an earnings multiple, right? So at what multiple of the annual earnings of a stock or of the overall market is that market trading at, right? So if you're earning $100 million a year and you're valued at $2.5 billion, that's a multiple of 25. Now, historically, multiples tend to be around 20. Prior to this latest crash in the US, multiples were hovering around 28. Now, what does that say? That says there's a lot of confidence. It means that the stock markets are high by that measure, which is really a pretty good measure, right? That valuations are rich, and it shows a lot of confidence about the future. It's saying we're willing to pay more now because we believe there's going to be a stable economy, there's going to be ongoing growth, and so that sort of future discount is lower and we're able to pay more now, right? That's what a high multiple means. Now, no matter what happens, to my point, Chris, it is likely the case that multiples on US stocks are going to be reduced, right? They've already been reduced. They're still not cheap, right? I think multiples are now around 25 in the United States, but they're likely to reduce. And the more to the point, they're likely to stay lower, right? Because what I'm saying is true, which is that stock multiples and market performance are to a certain extent a vote of confidence in the future, that level of confidence has to have gone down, right? Like, we've got somebody in the White House who is just completely unpredictable, and whether he, revokes the tariffs or keeps them forever or starts a trade war or ends a trade war or whatever, We just don't know. The uncertainty's gone up, and that is a permanent tax on stock prices. Okay, so what that means, Chris, is I think multiples are going to be lower for the foreseeable future, and they could be a lot lower, right? Especially if the economy itself suffers, which is not unlikely, right? If you're a startup, this goes back to VC maths, and we've talked about this before, right? Which is the valuations that you get as a startup are somewhat based on the VC or the investor's calculations on what their exit value will be, right? So they're like, okay, I'm investing in Series B at a valuation of $50 million because I think there's a 20% chance this will exit at $1 billion, and my fund maths works out at that level, right? And we think it's going to exit at $1 billion because we think it'll make X money and it will attract a 25X multiple on revenue. Okay, now if that 25 goes down to 20, the exit valuation will go down, and then that maths will cascade backwards all the way back to the earliest stages, right? So this is what we mean when we talk about multiple compression affecting startups. If investors think that their exits are going to be smaller, then they need to reduce the valuations that they invest at by the same amount, right? And so that affects you as a founder. You will not be able to raise at the same sort of multiples as you may have been able to do just a couple of months ago because of this. And it's a damn shame, Chris, because we were just coming out of this sort of inflation-related kind of loss of confidence. And we were really starting to see, a lot of green shoots and the market unfreezing a bit in terms of, early stage venture and so on. And I think this just throws us right back into that uncertainty and makes things unnecessarily difficult for founders just when things are starting to look better. In general, you've talked about efficiency and AI and all of that, and that's true, and that's good advice in general. But I think there's another more tactical thing, which is if you're a startup and you are relying on sales into the US, right? And this is quite common. I've seen a number of startups saying, oh, their sales cycles are slowing down, especially if you're an enterprise and you're selling to American companies. These companies are in response to all this tariff stuff, they're just hold off on everything. We don't know what's going to happen, right? This is why it's harmful, by the way, right? This is how these things can become self-fulfilling prophecies of economic slowdown. Everyone's holding off on making purchase decisions. And so, when we talk about reconfiguration, it's okay, selling into the US, you're less likely to be able to hit your targets. You're less likely to be able to make the sales that you were expecting to in the US. And so when we talked about global reconfiguration, the local reconfiguration for a startup is, oh, maybe we should explore markets other than the US who are going to be more reliable trading partners. So yeah, how do you think about that, Chris?
Look, the US is still the largest, richest economy with it's the most target-rich environment. And if you're selling B2B SaaS or consumer, whatever, you're still going to sell into the US. And I don't know how much, if tariffs affect you or not. I don't know how it applies to software or, SaaS or services. But at the end of the day, what Trump's betting on is you're going to still sell into the US. And he's like, we're the biggest market. We're we got the best currency or one of the best currencies. Fuck you guys. We're going to whip the world around and just bully everybody. And so I think if you're a startup, I think you still want to go to the US because Europe is a hodgepodge of nightmare of different jurisdictions. Southeast Asia, their currencies are weak and there are also many different jurisdictions. You're not going to sell to Russia. You're not going to sell, Australia's tiny. Where are you going to sell? You're going to sell to the US. And so it's so hard to say what you're really going to do. I think what you end up doing is you're just going to have to hold onto your ass and wince and just hope that this shit clears up real quick. That's what you have to do.
Yeah.
To keep your head down, and you have to execute well, execute great, make great decisions, and just come out the other side when this guy becomes a lame duck, gets fired, goes to jail, decides that the stock market can't tolerate anymore.
Fingers crossed.
Billionaires rock up at Mar-a-Lago and tell him to pull his finger out of his ass. Whatever happens next, you're just going to have to hope that it happens fast so that you can navigate through.
Yeah, you're right, Chris. In a sense, we're trying to provide good advice here, but ultimately it is just batten down the hatches, right? It's the same as any other economic shock. It's really frustrating at a personal level politically, right? Because it's a complete own goal. It's completely unnecessary economic shock. But yeah, gray clouds are on the horizon, right? And you just got to prepare for that.
Yeah. And then, if as the audience detecting any ambivalence in my voice, it's sort of we're trying to, Yaniv and I have a promise between us to not make this about the general politics or personal feelings, but it's just so dumb. It's so dumb. And the people trying to justify it are so dumb. And they're trying to kind of convince the rest of us that we're dumb and that there's some three-dimensional chess going on. And it's not any of those things. It's just dumb. And what smart thing can you say about a dumb thing? And this is the thing I'm actually struggling with the most, Genev. There's all these hot takes on CNBC and All In podcast and all this sort of stuff. And they're all kind of sitting around the table trying to use all this sophisticated language about, back end of the curve and the front end of the curve and this and the refinancing and the whatever, the bonds and the... And I'm just like, guys, someone just say the truth. The truth is, this is dumb. He's dumb. This is dumb. He's surrounded by sycophantic idiots. And this just needs to stop. And I think as a podcast, we want to focus on startups, and I think we should also focus on truth telling. And this is just dumb.
Yeah, this is dumb. Like this whole like 6-dimensional chess thing drives me nuts because it's like, to me, it's like astrology or something. It's like, yeah, sure, you can discern patterns in random movements, right? Sure. But like the amount of credulity you have to have, or the amount of Kool-Aid you have to have drunk to really believe that this stuff is 6-dimensional chess rather than exactly what it looks like, which is some combination of just narcissism, stupidity, and, potentially being a Russian asset. I'm going to put that one on the table because, like, frankly, there's more evidence for that than any of the conspiracy theories that have been floated from the Republican side of the table. Some combination of those things have the greatest explanatory power. And there's the old Occam's razor, right? The simplest solution is usually the correct one. And so 6D chess is sure as hell not the simplest solution. You would have to be pretty far down that rabbit hole of MAGA to believe that what's happening here is a brilliant strategic move rather than what it is, which is just wanton destruction.